My guest today comes from Franklin Templeton, David Alderman, research analyst for digital assets. For anyone in traditional finance, this name is an institution. We are talking about one of the most established asset managers in the world. They have a history of over 25 years and manage around 1.6 trillion US dollars. The company is listed on the S&P 500, has its headquarters in California, and is present in more than 30 countries worldwide. Beyond traditional investments, Franklin Templeton is increasingly focusing on digital assets. They offer crypto products like the XRP ETF and have done pioneering work with the Benji token. It is the first US registered fund running on public blockchains like Stellar or Base, so they are consistently bringing real-world assets on chain. What is behind the strategy? How does a major institution choose a blockchain? And how do they see the future of crypto in finance? That is exactly what I am discussing with David today. A quick note, David speaks English, so we are conducting this interview in English. My tip, just turn on the German or English subtitle if you need them. I hope you enjoy the video. Thank you. Hey, it's nice that you are here today. Thank you very much for this.
No, thanks for having me on. This is great.
And today we're talking about crypto ETFs, tokenization, and crypto for retirement. And I would say let's jump right in with the first question, David. In November 2025, Franklin Templeton launched an XRP ETF. I'm very curious. Why is Franklin Templeton showing such a high level of activity in launching these various ETFs? Was it primarily driven by client demand, or do you see specific long-term potential in these assets like XRP themselves?
Yeah, I would say it's really just all of the above. I mean, high level, we are big believers in the long-term potential of these assets, and we want to give our clients the ability to get exposure to the assets that they want, right? And so part of that is just providing access to some of the top coins, such as XRP, right? XRP, I think, is like around number 3 right now in terms of market cap. I would say that high level, that's kind of the strategy associated with the ETFs as of today.
So you also offer mixed ETFs like the Franklin Crypto Index ETF, which holds 8 different coins, I think, including Bitcoin, Ethereum, and Chainlink. How do you actually select these coins? You have just said it's about market cap, for example. Are there more metrics you use?
Well, so specific to that product, it follows an index from CF Benchmarks, and part of their process for inclusion, it has to do with market cap, liquidity, also like regulatory compliance, right? So if you notice, a lot of those the coins that recently were added in the last quarter were they were also recently approved, like single asset ETFs, such as the Solana ETF or the XRP ETF. So it's really just a rules-based process, and that product is focused on just providing broad market cap weighted exposure to crypto. Instead of selecting you want to be Bitcoin, ETH, or XRP, this is just essentially a market cap weighted crypto product.
What is example about, let's say, Dogecoin? It isn't a decentralized network. So what are the metrics of, for example, for if there's a decentralized network where you can't just, I would say, have other metrics like this?
How do you mean? You mean as like meme coin versus?
Yeah, for example, Dogecoin is meme based, but it has a large market cap and a long history. So is long history more than over the meme coin biased scheme?
I think the point of the product is really to not make too many decisions, right? It really needs to be a systematic rules based process. Dogecoin is an interesting one where it's like it's technically it's a hard fork of Bitcoin, and all they did really was just change the inflationary design of the token. So I think it's kind of difficult to come up with a rules based process that completely removes it. That's just purely based off metrics.
Are you planning to offer more products for this for 2026?
I'm not able to speak on like what our product pipeline is, but I think, high level, it is essentially, we want to provide exposure, either maybe it's ETF format or maybe it's around our tokenization platform, to clients, based off what we think is has long-term potential based off client demand, um, that sort of thing. I think, for us, it's really just, Franklin Templeton is a really large financial institution. And so, we want to be involved in almost everything associated with, call it, asset management in crypto.
As an analyst, you deal with crypto every single day, but I often see comments claiming that there are no fundamentals behind crypto. That is all just pure speculation. What is your take on that?
Well, that is quite the question, because it's always there clearly are fundamentals in crypto, right? You can go to various different applications and they have revenue. They have revenue. There's a business like financial statement that you can review. And some of these coins, even, they buy back their own token, right? With the revenue that's generated by the protocol. Like things like probably the most notable one of late is Hyperliquid, right? Where they buy back their token with revenue or fees generated on the platform. But a lot of people that are not super involved in crypto, a lot of the headlines that they see are related to like meme coins, or
Hmm.
like really sky high like valuations, and it just gives the appearance that there's nothing real going on. It's just pure speculation. That being said, a lot of like fees generated by, like, say, like Hyperliquid is speculatively driven activity.
Hmm.
But that being said, it's a product that's providing something that people want to use, whatever that may be. So you can kind of see a world where,
It's easier
today,
to measure. It's easier
um,
to measure for an investor, isn't it? If there's a buyback
yeah,
scheme behind it.
yeah, it's a buyback, and then you kind of go down the question of the typical questions of, is this revenue sustainable? Um, in the future, what could it potentially trade at if it reaches like certain revenue or certain market share? If these different DeFi applications, instead of it being meme coins that are being traded, it's tokenized stocks or tokenized bonds or whatever it may be, right? You can kind of start to see a world where, like, hey, in a world where these are better vehicles for trading assets, uh, how much in revenue can they generate? How sustainable is it? That sort of thing, right? So it just, eventually you can kind of move to the world of like um, having a real sustainable business model. But, like, but today, because most of the assets are arguably kind of meme coin ish related, it means that maybe the revenues are not as sustainable as they could be if they were trading real assets. But that's a world we're slowly moving to.
Hmm. Do you differ when you do your research between, I would say, let's chains, layer one or layer twos, when it comes to maybe revenues or buyback schemes or investing?
Yeah, I mean, we definitely look at those all very differently, right? Because it's I mean, you can kind of think about, like, let's say, like, if you want to invest in Ethereum, or you want to invest in DeFi protocols on Ethereum, or do you want to invest in L2s on Ethereum? Well, then it's kind of a question of, where, if we see some sort of economic activity within the Ethereum ecosystem, where is that value going to go?
Hmm.
And so there's this whole thing of, the analysis that we typically do. It's like, do we think most activity is going to be on L2s versus Ethereum? And then, like, how much of the revenue, or call it the take rate, fees generated from that activity, how much of it goes to, a base or an optimism or a arbitrum or whatever it may be, and then also how much of it goes to the DeFi protocol, if any, right? And that's kind of the analysis that we're doing, and then we try to think about, how strong is that moat? Is it easy for that activity to migrate over to a different network? That sort of thing.
When it comes to the definition of utility, would you say the value is um,
Yeah.
based on the chains because of the layer one, and they are hosting everything, or is the value will be drive to layer ones, to DeFi protocols where an activity will take place? It's a discussion in the space, actually.
Yes. Yeah. No, that's a good question. So it's I think utility. I mean, if activity is happening on a let's just say some sort of crypto application, right? That's utilizing blockchain. Obviously, the underlying blockchain is going to accrue some of that value of that activity, right? So then and there, like right there, it's a good. Who knows if that L1 is valued correctly, if it's overvalued, undervalued. But that being said, but it is on a fundamental basis is accruing the value of that that activity that's happening through that DeFi application or whatever application it might be. So I think for us, it's really more about like, do we see fees, revenue being generated, and is it going to token holders in some capacity? Like obviously, if it's an L1, the L1 is benefiting because you have to use the token to pay for the transaction fees. And then if it's some sort of DeFi application, then you have to kind of check, do you have governance rights over the treasury where the fees are going to, right? It's things like that. Even if there's no buyback, right? If they're buying back the token, that's great. But sometimes, that buyback is discretionary to the team, not necessarily a governance choice that token holders have.
Do you differ between, I would say, short-term investment strategies and long-term strategies when it comes to the choose of maybe layer ones or DeFi protocols?
Yeah, we're very much more long-term focused. These tokens have really, really high volatility, which can make it somewhat, can make it difficult as a long-term investor. But I think that's why it's really important to just think about like, how overvalued, undervalued are these tokens relative to the risk that we're taking? And you could even use volatility as a proxy for risk if you wanted to. But high level, I think it's long term. The only caveat there is I think the history of crypto is just it's filled with proof that the moat in crypto is extremely low.
Yeah.
So like even if you back in the day, everyone used to talk about network effects, like right, like Ethereum's network effects are so strong, no one can compete. But then Solana eventually kind of came back, and it's like it's kind of proven that like, hey, yeah, network effects are important, but it's not everything, right? And I think we're starting to see that we've seen that even with like DeFi applications on these different L1s. Like you'll see like maybe the best example would be like OpenSea.
Yeah.
Back in the OpenSea was super dominant. Then Blur took over, right? And then if you look, I mean, NFTs, the activity is pretty muted today, but it really just shows like the moat in crypto is just not as strong as people would like to believe.
I also think that it also is very important that you go with the narratives, so that you can develop further what the crypto space needs and what the space off-chain needs in the next time.
Yeah, I mean, it is like for any application being built, it's important to think like, how could this be utilized 5 years from now, 10 years from now? Not hey, this is like some narrative that popped up a month ago, like we're going to build for that. Because then that whatever that narrative is, kind of eventually most of those narratives eventually kind of disappear, and no one ever talks about them again.
What narratives do you think will stay on the other side?
Yeah, I think a good proxy for that would be, to answer that question, is what narratives have been in the let's just call it like, I don't know how you would measure it, but like call it like the top 5 narratives over say the past year or two. Which ones are consistently in that top 5, right? And it's things like tokenization. Tokenization has been talked about for years. And I think that's a good tell that, hey, like there's something real here. It hasn't taken off. We haven't had like a massive boom in tokenization yet, but I think we're all working towards it. So it's I would say it's kind of sectors like that. Stable coins is another one, right? I mean, that's kind of some tokenization, but stable coins, and people have been talking about it for years. It just hasn't taken off yet, but that's definitely like a sector where I would say you got to play the long game.
What do you think about artificial intelligence and blockchain?
I think there's been a few projects that are crypto AI related that have the tokens have kind of done well, but I don't think like on a fundamental basis they've been able to really justify their valuations yet. I mean, things like Tau or virtuals or render, those are the ones I would think of. But that being said, it definitely makes a lot of sense that eventually someone is going to come in and there's going to be some sort of AI application in crypto that I think that's going to do super well. I don't know what that could be, but like I think that's something to watch. And it very well could just be, there's some of these AI models are getting so good. It's like you can code up a crypto application without even knowing how to code, just using AI. So I don't know exactly, but like it's something. It's definitely something to watch that I would keep an eye
Um, to what extent do you see crypto as a viable building block for retirement planning? Do you think it is still too risky? Speaking of long-term investments.
I mean, it's certainly risky. It's certainly not. You can't say it's not risky. But I think it makes total sense. It really depends on what the individual's risk tolerance is, and that's something you probably just need to speak with a financial advisor on. But I think at high level it makes sense to be, wherever you sit on the risk spectrum, it makes sense to be invested in all assets, right? High level. It's just a question of how much. So for crypto, it's super risky. So, it's not something that it probably doesn't make sense for most people to put a lot of their investment in crypto, but it would make sense for a little bit. How much that is, it's something individuals got to figure out, but I think it does make sense.
Yeah. You spoke with us about tokenization. And let's move to your pioneer project, the Benji token. You're bringing a real money market fund onto the blockchain. Could you explain us with a simple example what are the concrete advantages for an investor, for example, and on the other side for Franklin Templeton of investing in a Benji token?
Yeah, so that's a really exciting project that's been doing really well for us. As it like when you think about like what it is, essentially it's taking a traditional money market fund and putting it on chain. So instead of using a traditional transfer agent that tracks who owns what of this money market fund, it's tokenized. So the token actually represents who owns what. So it's essentially, instead of using a traditional transfer agent, we use blockchain. But because we use blockchain, all the advantages that blockchains provide are given to this tokenized money market fund. And the typical ones are things like real-time settlement. You and I could transfer the Benji token to each other and it would transfer instantly. But it also means that we can track who owns what at a more finite, more detailed level than we can with a traditional transfer agent. So like last year we came out with this feature called intraday yield, which essentially tracks like, hey, if I only own this Benji token for 6 hours of the day, I still earn 6 hours of interest, 6 of the 24 hours of interest, versus in the traditional world, right? It's just whoever owns it, like at the end at close.
Yeah.
So it's things like that where it's like you add in real time settlement, you're able to track ownership at a more detailed level.
It's also about transparency, isn't it?
Yeah. I mean, that's part of it too, right? The only reason we can do intraday yield is because we know who owns what at like each block, right? That detail is also provided to, I mean, anyone can track that.
Are there some cost advantages for Franklin Templeton, for example? I think that's also one of the most criteria.
So it is, yes, it is. Part of the reason we can do intraday yield is because it's cheaper for us to do that. It's cheaper for us to utilize blockchain than it is to use it in the traditional world. So that provides, operational, like more operational efficiency on our side, but it also, it's also adding a lot of benefits to our investors too.
I'm very curious about the selection process, David. Why did you choose, for example, Stellar first instead of, let's say, Ethereum? And are you planning to integrate even more blockchains? I just read today that you will choose also Canton network. Is it right?
Yes, that announcement I came out like maybe a month ago. I
Yeah,
think something like that.
it's
Yeah.
December. There was an announcement.
Yeah. So, I mean, with Stellar, it was at the time, this was probably 2018, 2019, I believe. We were working with the SEC on, we had this idea that we wanted to tokenize a money market fund, right? Put it on chain. And what they wanted is to limit our, call it, attack surface. So if anything went wrong, and at the time, Stellar did not have any smart contract capabilities. And so it kind of lowered the attack surface that one might have for like a some sort of, a tokenized regulated security. So that's really, I think, why we were on Stellar initially, and it's kind of taken off since. But you're right. Since then, we've added a ton of chains. I mean, we're on Ethereum, Solana. The Canton announcement came out. And there's a few others. But for us, it's in terms of like what chains we're going to be on. It's really just where we think client demand is going to be, or where we think economic activity is going to be. So we're not trying to pick like the winner.
So you will always expand, or you will recruit some other chain if there's the activity lowering it.
Yeah, I'm not going to say we're always going to do that, right? It depends on like what we think the ROI is for that type of cost, but generally speaking, yeah.
Are you planning to integrate more blockchains next year?
I'm not able to speak on that.
It's okay. So, but I've read something more. That Franklin Templeton and Binance, one of the biggest exchanges in crypto, entered into a partnership last autumn to increasingly offer crypto assets to European investors. What significance does the German market hold in this context?
Yeah, so that's a really exciting partnership. I think, for us, it's really about bridging. There's a lot of crypto native users out there. It's a crypto native platform, Binance, and we have expertise in the the TradFi space, and so we really want to just bridge the gap, being able to offer more traditional finance products to the crypto side. So with Binance, there's a lot of opportunities like in tokenization and that sort of thing, where we're exploring a lot of interesting opportunities that that we can do with Binance as it relates to our tokenization capabilities. And I think highlight like as it relates to the more the German market, like I think it really only applies to, call it, the crypto native German crowd, right? So if and when products are announced, or new abilities are announced, whatever it may be, with Binance and us, right? I would think that they would be included in that. So it's really more of, I would say, really is more of like a global partnership. There's some exciting stuff going on there.
Yeah. Finally, to wrap things up, David, what are your top 3 trends for 2026?
I feel like it's a lot of I mean, it's a lot of stuff we already kind of talked about, but one thing I don't think we've really mentioned much is institutional adoption of Bitcoin, right? There's institutional adoption, right, with these ETFs launching, that you just go down the stack, right? It's like ETH, XRP, Sol, etc., whatever. But I really think 2026 is going to be like a huge year for institutional adoption of Bitcoin, right? We've seen a lot of success with the Bitcoin ETFs already, but I think there's going to be more. I think there's just going to be more. Like, to me, my high level view of 2026 is, I think it's going to be kind of, call it like a late cycle extension of what we saw in 2025. Right. So a lot of the trends that we saw in 2025, like stablecoins did really well in 2025. Prediction markets did really, really well.
Prediction markets, yeah.
Right. That kind of stuff, I think, is just we're going to get even more of that. Right. So we're going to get more Bitcoin institutional adoption, maybe to be more approvals by, the wealth platforms and the like in the US and also globally. Stable coins will probably continue to get more and more adoption. Who knows? We'll probably see some more like financial institutions launch their own stable coins, something like that. Who knows? Prediction markets really took off in 2025. I think prediction markets are going to do super well in 2026. I think there's going to be a lot more experimentation with prediction markets. I think that's one thing I would watch for.
What could it be, for example, for use case with prediction markets? Because many of us only know, for example, something like Kalshi, for example, or Poly Market, and only there's a bet. But I think it's even more. There are partnerships with the CME, for example, and I think you have to go further in detail. Do you have a concrete example? What could that be, for example, when we talk about prediction markets?
Yeah, or at least my thought is more like
your vision.
Sorry, what?
Your vision.
Yeah. To me, it's like, for example, I think 2025 was the first year where we started to see investors use prediction markets to help guide their view. They were using it as a research tool to guide their view of other markets, right? I think we're going to see even more of that, right? So I don't think we've seen a lot of institutional capital come into prediction markets, whether maybe to trade it, although the liquidity is a little low right now, but to like use it to guide their other trades, right? To use that data to guide the trades in like other markets. I think there's things like that is what I would be looking for.
That's very fascinating. Yeah, thank you very much, David. David, it was a honor to be you to have you here as my guest today. Your perspective has been incredibly helpful, and not just for the audience, but for me personally, to understand where the journey of crypto is heading. I hope you all enjoyed the show today. Have a wonderful day. Thank you very much, David.
Yeah, thanks for having me on.
Yeah, goodbye.